I'm Natalie Scott-Gray, Senior Metals Analyst at StoneX, and today I'm joined by Giles Plumb, Head of Base Metal Trading, and who runs the copper book for StoneX. Now, 2 weeks ago, we both attended Copper Week Club in New York, which is an annual gathering in which market players come together to discuss the outlook for copper. Now, over the course of the week, there were some questions, some topics that keep coming up. So today we're going to address those and both provide our views on them. So the first question is, are copper prices justified at record highs? Now, I think this was probably one of the most asked questions over the week. And of course, the backdrop that we have is that copper at the back end of last year rose above its 3-year upward trading channel and held above it. Now, we've had some historical price moves over the last month. Not only has copper risen above $14,000 per tonne for the settlement price, but on the 13th of May, we had a record high of $14,153 per tonne. Now, in my view, are copper prices justified at these levels above $14,000 per tonne? Given the speed of the ascent of copper prices and looking at copper's price drivers, I would argue they are not fully justified at these levels. So just going through this, if we look at the fundamentals, last year we had a 600,000 tonne plus surplus. This year we're expecting about half of that level, but there certainly isn't a lack of material out there. If we look at global stocks across LME, SHFE and COMEX, by the end of Q1, they hit all-time record highs. And whilst we have a deficit market for concentrates, mine production is expected to ramp up in the years ahead, and we should start to come into balance by 2028. Now, if we look at what investors are doing, it's interesting to see a divergence in the marketplace. So we do have net longs, they're prevailing on COMEX and on LME, but we have a net short on the Shanghai Future Exchange. So we are seeing not a clear global market trend when it comes to copper from the speculators. And then finally, if we look at the macro, we've just seen the US dollar hit a 1-year high. Our house view is for no rate cuts this year. The impact of the Iran war has meant that GDP globally has been downgraded. We're still in an environment of heightened geopolitical tensions. We have 60 days for US and Iran to have their negotiations over the Iran war. The Strait remains closed. We still have Russia and Ukraine in war. And of course, Trump has outlined Section 301 tariffs to come into action for more than 60 countries. Meanwhile, if we look to China, the latest hard economic readings in May on a year-to-date, year-on-year basis have weakened versus where we were last year, with the exception of exports, but that is being solely supported by AI and high-tech manufacturing demand. So why are prices at these levels? Really, I see it threefold. Firstly, I think supply concerns with the beginning of the Iran war were focused on in the copper market over demand concerns, but particularly supply chain security. And the fact that 64% of all visible exchange stocks sit in the US has really been a talking point. Secondly, of course, Section 232 tariffs on refined copper imports, that is certainly front and center in the market. And then finally, wider market implications of geopolitical tensions, of rising inflation. Hard assets are attractive to hold, and certainly copper is one of those. And we have this dangerous link, I would argue, of copper and AI. We've seen US tech stocks and copper price moves hit their highest correlation since 2012. And over the quarter, at least $14 billion have gone in to net long positions. So in my view, Giles, I think prices above $14,000 per tonne for copper probably aren't fully justified. But how do you see it from a trading point of view?
Well, if we look back to the end of last year and we look at the rally we saw from October through to the end of January, I think we saw an intraday high of around 14,500. That's coming from a base of around 11, 12K, sort of early November. But that's a huge rally. We're talking 20 to 30% there in a couple of months. So copper tends to have a history of overrunning its news stories, so it gets ahead of the curve. So funds tend to run into the market. As you mentioned, people are looking to own copper, so that's another factor this year, a critical mineral. So that's adding to the story. The AI boom, I think, is obviously a crucial story, but In my opinion, 14K was overdone. We're seeing it now dropping back a little bit. I think I'm seeing some of the funds, once the price has lost momentum, some of the funds are profit taking. So interestingly enough, through Copper Club, you mentioned most people were bullish. They're talking EV story, they're talking the AI story, and everyone's, generally over time, the price will probably be inflated. But I think the swift move was too fast. And so I was one of the bearish voices in all the committees that we saw. But we have seen the price drift lower because of the overheating, really. And like you mentioned, there's lots of other factors here. There's government debt, there's interest rate worries, there's lots of things that are pushing the price back down. It's basically, my point was, once the noise is over, the noise of the war, the peace, the AI boom, once that noise is over, then the price should settle back. And we're sort of seeing a little bit of that at the moment. I think this morning we're down at 13,200.
Yeah, no, I agree with you. I mean, there's no doubt the long-term outlook for copper holds very bullish views, but to jump this quickly with the price, it doesn't seem...
Historically, copper always tends to do it. Back in May 24, the CME stocks are very low. I think the high back then was 11,200. And that happened very quickly, swiftly followed by a drop to 9,000 again. And so copper tends to jump ahead of the story and the actual rollout of these things. The EV story dwindled a little bit. The AI boom... it's going to take time to build these centers, and the demand isn't going to happen overnight. So, I think we just need to calm down a little bit.
I agree with you. I mean, definitely over that kind of upward trading channel, that new normal we had for 3 years, we did have those spikes to the upside. It was always driven by speculators. But of course, with prices where they are now, what could be the realistic floor, let's say, if the noise did come out of the market?
I always look to see where the buying comes in, and a lot of the Far East clients have been sort of trading the range 13.5 to 14K very well. Now the price has dropped below that level. We saw yesterday copper had a 12,000 handle on it. So I think a floor really should be around 12.5. I think we'll see a little bit of long liquidation over the next couple of weeks if the price stays below 13,500, and that should push the price back into the 12s. 12.5, I think, should be the new floor.
Well, of course, this brings me on to my second topic, which is Section 232, which, I mean, is the biggest swing factor, I would say, for copper.
Well, all bets are off if that comes
in the near term, exactly. And, the background here is that we're coming up 30th of June to this deadline where the Commerce Secretary in the US, Howard Lutnick, has to report his findings or his recommendation to Donald Trump on whether they want to have refined imports of copper. So the kind of framework that they put out was 15% by 2027, moving it up to 30% by 2028. Now, there is actually no legal timeline that Trump has to react. Unlike when you have the beginning of Section 232 investigations, he has 90 days to make a decision and then 15 days to act on what his decision was. There's no legal framework for the 30th of June. So we might not get an announcement at all, but the markets are guessing, are we going to have an announcement that no tariffs are going to come for copper on refined imports into the US? Are we going to have the framework outlined of, potentially they're going to say the tariffs are coming in at a certain level and when they're coming in, or we might not get an announcement at all. Now, markets have just been guessing this because on one hand, having no tariffs doesn't necessarily make sense because Trump has, outlined his goal that he wants investment in upstream processing. There's only 2 copper smelters in the US, so he wants investment to be there. So if you say no tariffs at all, kind of takes the incentive away. But given you've got midterms coming up, we have the Iran war negotiations, rising inflation, is he going to put tariffs in sooner than we expect and therefore less copper will come in and potentially higher copper prices, negative impacts for downstream consumers? That could argue, maybe tariffs won't come in. So are they going to come in? We don't know. But because this announcement is going to come out in the near term, can you walk us through each scenario of what you would think would happen in the market? So let's say they say no tariffs are ever going to come in on refined copper imports.
No tariffs at all. CME price drops. ARB goes back to an LME premium. Material potentially moves out of CME sheds back into the LME sheds.
Still in the US?
Yes, they'll go to New Orleans. They'll be onshore, but in LME warehouses. The market at the moment, let's say 2 or 3 weeks ago, was probably pricing in a small amount, let's say 7-8% likelihood of there being tariffs. Having been away for a week and coming back, the market is pretty flat again now. So the September arbitrage is $200. So if it comes in at 15%, then that should be $2,000 the premium. So the market is pricing in potentially no tariffs.
No tariffs, okay.
So, but then that's a real change from a week or so ago.
Yeah, I mean, the markets were caught out last year sharply, so I guess that's why we have so much uncertainty on guessing policy.
There's not so many players actively trading the ARB at the moment, because last year most of the market was long CME, short LME, and that hurt them at the end of June.
I mean, so in the opposite scenario, and they do say we're going to have tariffs that come in exactly as they outlined in 2027 at 15%, then what do you expect?
The CME to blow out, the ARB to go to $1,500 pretty quickly. I mean, the ARB last year collapsed from 3,000 to virtually flat in 2 hours. So it moves fast off these announcements. And, you know, like you said, he might not say it at the time. So it might edge out expecting him to put tariffs on. But yeah, it's a waiting game. I've given up trying to second guess Trump. So.
Okay. I mean, we will just have to wait to see for the 30th, and we may not get an announcement at all, but at least we've outlined what the scenarios could be.
I don't think we will get an announcement.
I also don't think we'll get an announcement as well, so we agree on something.
We agree.
For once, it doesn't happen. Okay, so moving on to another topic that was questioned a lot over the week, of course, was the Iran war and the implications of the Iran war coming to an end. At the time, we didn't have the ceasefire negotiations in play. That happened a week afterwards. Now, my view, the impact of the Iran war initially was negative for copper. We saw prices drop for about 3 weeks, but then focus turned to supply concerns because 17% of copper is produced by solvent leaching and electrowinning. And the fact that China stopped sulfuric acid exports, the Middle East, of course, exports about 50% of seaborne sulfur around the world. We've seen sulfur prices jump over 80%. So countries like the DRC and Chile potentially were going to have some tightening in supply because of that. Now, the reality, I would say, there is that there's quite plentiful stocks actually of sulfur or sulfuric acid. So the impact was more of a headline story than in reality. So if the war ends, let's say, in 60 days fully, as promised, then the supply risk is actually much less than we thought. So really the bigger focus for me is the implications to global economic growth, because even with energy prices having spiked, there has always been a lower risk premium than we would have expected, because when Russia invaded Ukraine, energy prices haven't jumped anywhere near the level that we saw when that happened. And actually, the reality of that was trade flows were just altered, whereas what's happened with the disruptions in the Middle East is about 11 million barrels a day of oil is not coming out. So arguably, the market never really priced in that the war was going on fully. There was always this optimism, I would say, that the war was going to come to an end. So if it doesn't actually end within this 60-day period, demand destruction, the impact to global economic growth is going to be far greater for copper than the markets are expecting. It's certainly, I don't think, anybody's base case, but the end of the war really is critical for the health of the global economy. So for copper, that's my focus. But of course, you trade it, every single day. So how has this really been for you?
It's been behaving strangely. I'd say the 39 times that Trump has called peace in the last couple of months, copper tends to rally off the news. Now, in theory, the rally shouldn't be there, because if there's going to be more supply issues and the war's continuing, then the price should come off a little bit of demand destruction. But it's been behaving very strangely. Today we're seeing the prices lower. I tend to agree with you about the demand destruction going forward, and that's the noise that we were talking about, where we're having daily headlines where one tweet pushes the price left, right. So yeah, I think it's nearly settling down currently, but if the war ends, I think we should eventually get rid of the noise and we should see it lower.
I mean, one of the longer term implications that I did allude to earlier, but it is that the path of monetary policy has now actually materially been altered, and we're not expecting any rate cuts in the US. The markets are actually pricing in hikes.
Yeah.
So that delay to cyclical demand recovery is a longer lasting impact, I would say, of the Iran war as well, but that's probably been priced in. And so you're saying end of the war will actually be, copper will take that as a positive and push the monetary policy kind of aspects or interest rates aside, or if we'll return to that later in the year?
I think we'll return to that later on in the year. I think currently where we are at around 13K is where we should be. So the less headlines we get about the war, the better. We'll then concentrate on demand again and interest rate hikes potentially, which will be bearish for copper. So there's a lot to balance out here. And then towards the end of the year, everyone gets bullish near Christmas, and the AI story comes up again, EV story comes up again. There'll be something else. There'll be, we've got to look at the mines as well on supply side there.
With Section 232.
232, I can't forget that, I know, but then that's going to happen over the next 2 or 3 weeks.
Yeah.
Yeah.
So now this is specifically for you rather than me, I would say, on this question, but because we've got this increasing move for supply chain security for copper and talk of more bilateral trade deals being done, people trying to secure long-term supply of copper, that could be taking, you could argue, units of copper off exchanges globally. But, how relevant are copper stocks as a guide for the market still, even if more material potentially is hidden or not being seen in these exchanges?
So everybody who needs the actual product will have deals, and with mines, with any of the other producers and smelters and offtakes and all that sort of thing. So people who need the material will have deals. If they need more material, then they come to the areas where it's the last resort, which is CME warehouses, LME warehouses. Now, is that relevant? Are the levels relevant? Yes, because if people are coming for those last little tons of copper that are left, then that will dwindle, and that will create tightness amongst the forward curve. So it is relevant for me, very much so. We have the stock report every morning to make sure that we're up to date with what's being cancelled, what's being moved around. There are some fun and games that are had with certain players in the market that cancel warrants and put them back on again. But it's a good signal, but it isn't the whole picture, like you said. Shadow stocks and off-warrant material.
I mean, where are we with the forward curve at the moment? What's it showing us?
Forward curve is a volatile beast at the moment, and we're back into a contango, so it's showing enough supply not to warrant any tightness. But it's very easy for it to slip into a backwardation. I mean, at the higher levels, 14K, we're seeing a lot of forward selling. So that means that the price have to be borrowed forward. So it flipped into a backwardation, but that isn't because of a supply issue. That's just because of the way the market was driving the price. So
if to understand the real details and technicalities in the market when you're looking at that, then it's not a given.
Look at all angles. It's not just about how much stock there is in the warehouses. If the price is at 14K, people are getting a little bit, they think that it's losing momentum, so they're going to sell forward. And that's what we've been seeing.
Right. My final question, I have to just talk about AI a little bit more. You have touched on it, but really from a trading point of view, how has it impacted trading over the last year? I mean, we had it when we were talking about the beginning of 2024, when we had the COMEX squeeze. And I remember back then when I was talking in Copper Club, a couple of years ago, that the macro, the fundamentals weren't really supportive to have record high prices for copper at that time, but people were saying copper will have the long-term deficit market, and it's used in AI, and we saw money go in and money come out of the market. It's re-emerging very strongly this year. So how does that impact trading for you?
At the end of 23, 24, it was more the EV story, wasn't it? That we saw the highs back in May 24, I think, before it collapsed again. And then add to that, so the EV story is bubbling along in the background. The price of petrol is obviously going to push people more towards electric cars. The AI story is a bigger story in theory. Everyone's interested in data centers now and how much copper is needed in what are they called? Hyperscale data centers. 50,000 tons as opposed to 10,000 tons. So yeah, it has impacted what I haven't been running very short this year. Let's just say that. I've been trading from the long side because, why wouldn't you? But the bit where you need to pick when it's going to retrace, that's the key point. It's a lot of people getting a little bit tired of the stories. People getting a little bit bored. The momentum's lost, and then people have to long liquidate, which is what we're seeing at the moment.
I mean, we were asked definitely over the week, what's actually driving copper demand, and in reality, AI is less than 2%, and
that's the point. I think this is all. Sorry to interrupt.
No,
this is all fund-driven activity. It's spec-driven. Copper is is now classed in the same sort of conversations as gold. It's an investment product. It's not just a base metal. An industrial metal. So it is an investment grade product.
I mean, and this is like some of the danger with it, because just a small bit of macro money or investors coming into the copper market, obviously commodity future market versus equities or bonds is tiny, so it can have this disproportionate effect. And I think the currency debasement trade we had back end of last year, particularly for gold and safe havens, but it's built into copper, and that's probably why I think prices went over that $13,000 per ton mark. But the reality of demand, like I've said, AI is only 2% or less than 2% of copper demand. What's actually driving growth is its use in grids or electric vehicles, renewable energy, power infrastructure. And, that's evident because if we look at these kind of new productive forces, which this is what that's categorized as, excluding AI, that is a bigger portion of growth now than the Chinese construction market. So that's real demand, and that's where investment decisions are being made. In reality, I think the capex associated to AI probably will have to be downgraded as time goes on, because it's not just a question of, is there enough copper or what price is copper, but for these AI data centers to actually come on, they've got to have grid connectivity, you've got to have energy security.
It's going to take time.
Yeah, labor, equipment, there's so many hurdles. And then, of course, we're not even talking about substitution or thrifting, which happens in any industrial component when prices particularly do go up. So I think that's probably the main takeaways from AI.
I think you can get confused the spot price and the specs that are influencing that in what is actually quite an illiquid market. It isn't. It's not one of the equities. It's not gold. It's not. It's sort of new to the investment grade environment. So it's illiquid. It moves fast. We've had 11, 8, 7% moves quite regularly this year. So yeah, it's just a very different story to looking at the fundamentals and the macro side of things. So you've got to be aware of what's going to happen very quickly.
I agree. I mean, just to wrap up, view for copper, bullish, bearish for the rest of the year, where are we?
Well, I was bearish $1,000 ago. So I've got that one right. But now where do we settle? I think we need to have copper back towards 12,500. Then the real buying will kick in again as the stories start becoming more important again. So people will realize that the AI boom isn't here yet. It needs to develop and people need to set up all these centers. So I think the price will drift back, longs will liquidate. But over a longer period of time, 13, 14K is definitely where we should be.
Okay. I mean, if I'm going to answer the question myself, which I should do,
I should ask you.
Well, yeah, but I mean, I think it's going to depend what happens with Section 232. If we don't get an announcement and we continue to see material going into the US, as I've said, 64% of all stocks on and off exchange on LME and COMEX sitting in the US now, that is creating tightness outside of the US market. And that's going to be one of the bullish drivers for copper if that does indeed play out as we think it will be.
we need to caveat everything we say with, Trump could change this at any time.
Oh, completely. Exactly. So watch this space. It's coming up shortly.
Mm-hmm.
Right. With that, I'd like to thank you for watching, and please like and subscribe.